Welcome to the FIREchat podcast. Today I have Mr. Steve Lazerson with me. And Steve is a mortgage broker and all kinds of stuff. Tell us about yourself, Steve.
Hi, everybody. My name is Steve Lazerson. I'm with Peak Finance Company, and I've been in lending for 41 years now. And I actually got my start in lending. I was in the antique and classic car business, restoring cars, and then I would go out and I would find a property to purchase, and then I would refurbish it, and then that's how I started doing loans. I would go ahead and sell the property, and I would do a mortgage on it, either private money or conventionally. And then I started doing full-time with commercial. And then after that, I started getting into residential mortgages also.
Nice. Yeah, I didn't know about the car stuff. So this is why I like to do this stuff, because I get to know people too. That's really cool. So you started lending money for cars?
No. I would go ahead, I would buy cars, I would restore cars, but I would use the property as a way to build a business on that property. And then I would go ahead and would lease the property out, and later on I would sell the property. So it was a way to get in to the business. I would carry the mortgage on my own. And it just, after that, I got out of the cars completely, because the lending side of things was a lot better than the car side.
Yeah. Yeah. I'm sure there's, depending on how you, on I can see there may be more money in houses than cars, but I guess it depends on the car, right? I mean, I've seen some crazy stuff happen at the Bear Jackson and all those. Did you ever go to that?
Yeah, I used to go to all the auctions. I met a lot of famous people at the auctions, and cars that we used to buy maybe like $10,000. Those cars could be anywhere from $100,000 to $1 million now. So if we all had a mirror and we could go back in time and we could, just set those cars aside, I mean, we'd all be multimillionaires now.
Yeah, of course. And don't worry, we're gonna get to real estate here in a second. But you're my first classic car guy, so I want to talk about cars for a little bit, if that's okay.
That's fine.
So you basically flipped cars.
Yeah. We had a restoration shop. We specialized in older Corvettes, 1955 to 1957 T-Birds, and then the muscle cars like the Camaros, the Chevelles, things like that.
What was your what was the cheapest you ever got one, and then what was the most expensive, like your biggest flip, I guess?
Yeah, the cheapest Corvette I ever bought was $1,900, and a car like that today, even though it was really trashed condition, it would probably be worth $35,000 today. So you could see the appreciation. Wow. Just if you put that car in storage and open the garage so many years later, you would have made some good money. And the most expensive was the last car that I bought was a 57 Corvette with factory fuel injection. And that car, I sold that for $20,000. And the cars were just starting to appreciate at that time. And that car today, the way it would be like a $150,000 car. So kind of the writing was on the wall. You had to have pretty deep pockets and a big budget, to do the cars. And then, if you went to the auctions, they had some phenomenal, different cars at the auctions.
Yeah, dude, that's awesome. That's something I've always had a love for cars. And motorcycles and stuff too, but I always came back to cars. I haven't read in really classics or anything. I would like to someday. There's this guy on Instagram that I follow who does a lot of house investing, but he also invests in exotics and older cars, and he has, so he does both.
Do you watch Hoovie's Garage?
No, I don't. I don't get to watch a lot of TV.
Yeah. Well, he's on the internet. You
Yeah.
just, if you're ever
it a
scrolling
YouTube channel?
through your home, you'll
Garage.
see Hoovie's Garage.
Does he do
He's-
both? Like he invests in cars and real estate?
No, he's just a car guy,
Mm-hmm.
and now he turned that into a job. He goes to the auctions, and they have he's a commentator at the auction because he had such a good following, on the internet. So they'd say, "Hey, why don't you come in?" And that's he does that on the side
Mm-hmm.
now.
So did you have like was it just a job for you? Like did you love cars? Like what was the
Yeah, I really, I did it first of all because the first car I bought was a VW Bug with an automatic stick shift, and the car gave me a lot of problems, and it's like I was tired of taking it to the dealership. I mean, I was going to college at the time, and it was, costing me a lot of money going to school. The car break down. So I said, you know what? I got to learn how to fix cars. So I went to the ROP, the Regional Occupation Program at the local college. I took every course there was on fixing cars. So, just by trial and error, and then I started buying cars and repairing them and then flipping them. I started out with like Volkswagens and old Dodge Darts and like Chevy Impala, but nothing collectible, just older cars. And then I suddenly said, well, if I could do it with these low price cars, maybe I could do it with a more expensive car. So I started doing the Corvettes. And back in the day, you could buy an actually a decent Corvette for say $3,500. Wow. And the ones that were really nice would be like maybe $7,000 or $8,000, and today those cars could be $250,000 plus. So,
Sure.
but anyway, it was a great experience, and I really enjoyed it. And even now, I still on the side I'm actually looking for cars if I
Yeah, it was going to be my
find
next
any.
question for you. Was
Yeah.
like, are you still into it? Like, do you have any?
Yeah, I bought an older Porsche a couple of years ago, and I didn't do too much work to it. It was in really good shape. Actually, my mechanic that he was a client of his, and he had it, and he wanted to sell it, and it was just a fantastic deal. It was like a one-owner car with really low mileage. So I bought it. I played around with it for a couple of years, worked on it, and then I sold it, and I actually made a little money on it. So,
Cool.
So I figure, well, if the opportunity comes up again, I would consider it. And actually, this week I'm going out to look at a couple of cars that somebody turned me on to. So they sound like, pretty good deal. Not really, really old cars, but well cared for one owner cars with super low mileage. And so, might get my hands dirty a little bit with those.
Nice. Now, what model? Like what? One of them?
One's a Mustang convertible.
Oh, nice.
And then the other one's actually just a regular Lexus, but the car's 20 years old. It's only got 18,000 miles on it.
What?
So yeah,
Oh, man. I'm looking for this.
Yeah,
Looking for
one
one of
owner car. The owner passed away. So
Yeah.
anyway, it.
Well, if you get one, or you pass on it, or you
Yeah.
want to sell it, or even wholesale it,
I know who to
you
talk
know,
to.
Yeah, let me know, because
Yeah.
I was actually, Caitlin's been looking for a car because her car got crushed in the storm back in April.
Oh, okay.
By a tree fell on it, and so we've been looking for something like that. And I actually saw one on Facebook Marketplace last night, and it was a '96 Crown Vic, and it only had like 114,000 miles on it, which is that's higher
That's-
mileage, but for a '96
Right.
one owner, single owner car, the title certificate, or the title only still had 7 miles like on the odometer. So it was like they were the original owners.
Wow.
And this thing looked like was brand new. I didn't see it in person, but the pictures, were totally clean. Like the carpet and upholstery and everything just looked like it looked like it had 10,000 miles on it.
Right.
And she wasn't about it, but I was like, for $3,600,
Yeah.
man,
It's not a bad deal. Can she drive a stick shift?
she can.
Oh, okay.
She learned how to drive a stick.
Okay,
Or
'cause-
learned how to drive on a stick.
Yeah,
So,
this one it's a stick shift. So,
Yeah.
and it's a convertible too. She
it's a
doesn't.
Lexus?
No. That's the Mustang.
Oh, okay.
Yeah.
What year is it?
It's 95.
Oh, yeah.
Yeah.
I like those.
Yeah.
But like, Lexus or Camry or, whatever. But, so you said something earlier that was like, when you were working on these cars, you probably didn't know that some of them were going to turn into classics later,
Well, actually, once I got out of the VWs, and those actually now they're actually worth a lot of money, quite a few of them, and they were mass produced, so there was tons of them out there, and we could buy them for $1,200-$1,500 in great shape, but the Corvettes, we knew that was like a different market. I met a lot of people. I'd go to the the old car swap meets, the ones in Pomona and other places, and they had a lot of the classic cars out there. So with the Corvettes, a lot of them were lower production and some specialty cars. So you could tell that the values kept rising every year the older they got. So
yeah, for sure. Yeah, I was gonna say like yes, it's hard to tell. It's like with baseball cards or like you don't know, or even houses. I mean, you don't know. Like when you're fixing, like there's houses that I've flipped that I was like, man, I wish I would have held on to 3 or 4 of those. When things skyrocketed, like and same with I would assume same thing with kind of cars, even the ones that are mass produced, where you don't know that like for example, like a 1985 Toyota pickup truck 4x4 is going to wind up in Back to the Future, like a very popular movie.
Right.
That is now that car is going to be worth even more just because of that.
Right.
And there's there's 85 Toyota pickups that are clean and they still go for like $20,000-$30,000.
Yeah.
And I'm just like, wow.
it's crazy.
Wow. So did you ever work with Corvette Mike out in Anaheim?
Actually, Corvette Mike wanted to go into business with me when he got started, and he came to me. He was doing his thing, I was doing my thing, and he wanted to go into business together. The only thing at that time, he wanted me to kick in $400,000, and that was a lot of money. Back then. This was back, in the early 80s. So I just, I kept, doing my thing on my own. And then he really excelled over the years. I'm very proud of, what he's accomplished, some of the cars that he's had, himself and he sold. And even the very last Corvette that I had at the time was that 1957 fuel-injected Corvette, and I let him sell it for me. I put it at his shop, and he found a good buyer for me, and and we were all went away happy. So
yeah, for sure,
yeah, we had some good times together.
For sure. Yeah, I grew up over by his shop on the 91 and the 57, and so
Yeah.
I remember driving by that. That shop. I don't think it's there anymore. I think he moved or
he's
retired
moved
or,
a couple of times. He was down, like in South Orange County for a while, and then he moved to one location in Anaheim, and then he moved again. So he's moved a couple of times over the years.
Well, cool, man. I'm sure we could talk about cars all day. Now that I know that you're into it, but we are here for real estate, so I guess we'll pivot back to that a little bit. Steve, I know you said you got into it after you had been flipping cars and working on cars. Tell me about your first deal.
Okay, so my very first deal was an old gas station that I bought in Anaheim. And it was just had a bunch of weeds around it, and I actually purchased it from the company Vans Tennis Shoes. They
yeah.
were just storing vehicles there, and we approached them, and they were willing to sell us the property, and they even carried the mortgage for us. So,
Cool.
it was a pretty good deal. We paid $120,000 for it at that time, and we had to come in with like 30 grand down. So, good terms, and we got in there. We cleaned up the property. But the expensive part came in, and I learned really quick with old gas stations. The tanks, were really old. The laws were changing, so we had to pull out the underground tanks, replace them with double wall tanks, and then new pumps and things like that. So I had bought a foreclosure house in La Habra Heights, not too long before that, and that house, we fixed it up, and we actually lived in it. And so I used that house. I took out an equity line of credit from the bank, and we used that money to go ahead and refurbish the gas station. So we put a business on there. We were getting into the smog business. That was kind of a big thing, and that was one of our original locations. So we put a smog business there. I was working there for a few years, and then eventually I decided I want to focus more on the lending side of things. So I sold the business to the employees, and then later on we went ahead and I sold the the property to the employees, and we did an SBA loan on the property for them. So that was like my first time, doing an SBA loan, and so that worked out good. They came in with just 10% down of their own money.
Wow.
And it came out. Everybody was happy.
That's cool. So your first flip was a gas station.
Yes.
That's cool. I haven't heard that before.
Yeah.
What made you look at that gas station and go, you know what, I'm going to flip that day, or I'm going to
it's kind of like nowadays where people, they see like an abandoned house or a boarded up house, and they say, hey, maybe I could buy that. And they, like how you teach about contacting the owner and things like that. We were just driving around, and we saw this old gas station. Now it's a pretty good location. We didn't live that far away, and we did some research, found out who the owner was, because there wasn't anybody there, but they had some trucks on the property. So we sent them a letter, and they actually responded, and they said, yeah, we'll sell the property. So we didn't have a ton of cash at that time, but we made them an offer, and they agreed to carry paper. And so, it worked out. And then because we did that one, then we went to Arizona, and we had opened up several smog shops in Arizona. And we were kind of commuting back and forth to run those. And then we found another old abandoned gas station. This one was owned by Exxon oil company at the time. And we got in touch with them, and they were willing to sell it at a very good price. So we went in there, and luckily that one already had the tanks removed. The soil was checked. The soil was clean.
You learned.
So yeah, we learned from the first go around. Yeah. So we bought that one from Exxon. We cleaned it up. We started our own auto business at that site. We did that for a little while, but then we kind of got burned out. Working out in Arizona, it's like 115 degrees, in the summer in the hot sun. So then
it's like 130 now with global warming. So.
Yeah, exactly. So we went ahead, we put the property up for lease, and we found a car guy, which was good, and he wanted to sell used cars out of that location. So he said, sure. So we leased him, the location, and, it worked out fine for us. It did that for a number of years. And then later on, the next door neighbor, he wanted the property. So we ended up, selling it to him. So those were like our first two commercial deals. So
that's awesome, man. What a story. Yeah.
Yeah.
That's really cool. I want you to say it one more time into the camera. How did you find your first deal?
Just driving around and saw, a property that had been neglected and, vacant. And we just contacted the owner, and sure enough, they wanted to sell, and the price, was right. And so
how did you contact them again?
We looked up, we pulled a title on it, and we saw who the owner was. We wrote a letter, and they did contact us, and we made them an offer, and that's where we started out. And then later on, the next deal that we did was a little shopping center it was in Anaheim, and it had like 5 tenants. There were a restaurant and some other individual businesses, and we now that one was actually listed for sale. We found it through a realtor, and it was a great. I thought it was a great buy. It was $275,000, and we picked it up. We played around with it, reworked some of the leases, and then a little while later, we flipped it, and we ended up, making a nice little sum of profit. But in retrospect, I wish we would have hung on to it because, it was a pretty big lot. It was it was about an acre lot, as I recall. And, later on, I'm driving down the street, and somebody leveled the shopping center and turned it into housing. So, I'm sure, and at the time, the houses were really, selling well. So I think they did really well, with that property. But, live and learn, buy something, whether you flip it, you hold it. But I think now I'd be more like a buy and hold on a lot of these assets rather than just being, a flipper.
Yeah. Yeah, for sure. And we're learning that too as we, but back then, I mean, could you have kept it if you wanted to, or was that not the play?
Yeah, we could have kept it. In fact, the partner I had with it wanted to hold on to it. I wanted to flip it, and so I ended up flipping it. And then in hindsight, I said, "Gee, we should have, we should have went ahead and held it." But that gave me the impetus to do more deals. Later on, I was looking outside of California. I bought a little office building in Texas, actually in Abilene, Texas, kind of a smaller town. Never been to Texas before. First time out there. I had some realtors around the country bird dogging properties for me. So one of them called me, "Hey, we've got this, little office building out here in Abilene. You want to take a look at it?" She went over the numbers with me. Wow, cash flow was great. And I said, okay, write it up. So wrote up the offer. The owner, he accepted it, and we flew out there, checked it out, looked good, and and then just got some contacts, some boots on the ground in case we needed to do any work to the property, and then just came back and kind of managed it from over here. We kept it. I had 2 good tenants. The cash flow, was phenomenal, and like 2.5 years later, I, flipped it and made a 50% profit. So
nice.
Yeah, it was good. And I don't know why. I was just, interested in these commercial properties, but they just seemed to work okay for me.
Yeah, that's cool. I mean, most people will start, like single family, and then they'll work their way up, and and everyone tries to, wants to do commercial or multifamily or whatever. But you were just like, nope, I'm just going straight for it. So I think that's really cool. You said the reason I was asking about how you found it, because the first one, the gas station, was that you sent the owner a letter, and I just wanted to point out that like that strategy still works.
Yeah.
You know, like people always ask, or always asking like, how do you find your deals or whatever? And I'm like, I send them letters. You know, there are people I send probably 500 letters.
Right.
It's all automated through Deal Machine, but
Right.
which there's a link probably in the description of this podcast if you want to check that out. But like that's how I send, you know, letters, or you know, every month. And then you said something too about the one in Texas. You said you had realtors all over the country looking for deals. How did you find, or how did you get realtors all over the country to just send you deals?
You know, I was just, you know, looking, and I mean, that, you know, wasn't as much social media a number of years ago, but, you know, I would go like on LoopNet and, you know, other sites that had commercial deals, and I contact some of the realtors in the area, and they say, well, I don't deal with commercial, but I have a friend of mine that does. I'd contact them. Hey, I'd say, my name's Steve, and if you come across, you know, anything that looks good, you know, let me know. And even when I sold the property in Texas, I actually I had a friend that lived in Michigan, and I went to Michigan to look at some properties because he introduced me to some commercial realtors over there. Mm-hmm. And I found like a great cash flowing property over there at a great price. And we opened escrow, but we did an environmental study on it, and we found out that there were a lot of oil wells and then kind of like abandoned oil wells right next to the property. And we were, you know, somewhat concerned about that. So we ended up pulling out of that deal. But as far as the cash flow and things, and right now, I just see like there are some great deals out there. I've been, you know, talking to various realtors all over the country and saying, well, what do you have for sale? And some of them have been, you know, getting in touch with me, and we've been making some offers, and some of these deals are really starting to cash flow like they haven't in many, many years, with the interest rates being so high. Yeah. And also, you know, with the commercial market, it's down, you know, right now. There's a lot of bad press with commercial, but you know, sometimes there's just opportunities. Like when everybody is buying, sometimes that's not always the best time to buy. When you're fearful of, you know, writing that check and pulling money out of your pocket because you don't know what the future is going to hold. Sometimes, you know, that's the best time to buy with anything. And, you know, old cars or stocks, whatever it is. I mean, sometimes you just have to go against the flow.
Yeah, when everyone's feeling good, it's
right.
You know, I think I don't remember who it I don't remember who it was. If it was a speaker that I was at for real estate, or but they were like, when the gas station guy is telling you to buy Bitcoin, you know, you're probably too late.
Right, right.
You know,
yeah, or
like,
the cab driver, he's saying, hey, once you consider this stock, and that's probably late in the game. Once it's in the mainstream press, and either they're saying stay away or this is the greatest deal of all time, then, you know, it's probably you're on the wrong side of things. Yeah,
not good advice. It sounds like you just buy all over. It doesn't scare you to be like, you know, in other states. I mean, as long as I know the tenant is going to be solid, you know, they've been there for a while, they've got a good lease. Especially I like triple net deals where the tenant's responsible for the taxes, the maintenance, and the insurance, the building's, you know, in nice shape. And the biggest thing is the dollars per square foot on a building, because if the tenant ever did leave, you want to know that you can go ahead and, you know, release it. You know, there's some properties, they have a really great tenancy to them, but if you ever took away the tenant,
you might have a little problem, getting, that same kind of rent out of it. So I always look, for value and low cost per square foot. And also population's important because, sometimes you can buy or look at a property in the middle of nowhere. And then if the tenant leaves, who's going to release that space? So if it's in a good part of town, there's good population, there's growth around the property, then that's probably a good sign for you.
Yeah, I would bet. What when we analyze, single family, you can pull comps on Zillow, you can look at what, things sold for around it. I mean, there's all kinds of programs and stuff. For commercial, when you're, how do you get like data on, what things leased for? You just look up like what the listing was for something else, and
I mean, you'll pull up comps just like on residential, and
where do you find those?
You go to Crexy, you go to LoopNet, other commercial sites, and they're on there. And then you talk to the brokers, and the brokers that have the listings. They usually specialize in those type of listings, and they'll have comps for you. And it's not so important that you find a comp that's within a mile radius, like a residential property, because you look for comps, a little further out, and that's fine, because really the biggest thing for me is price per square foot, and also the cap rate. And I do loans on commercial properties, and somebody had brought me a deal. It was in Texas near the border, and it actually had a really good tenant in there. The tenant was listed on the NASDAQ. The price of the property was very reasonable. It was like $400,000. But when we tried to figure out an appraisal on it, we did some research and we talked to some local people in the area. It was a small town, and when we looked at other properties that had sold in the near area, we found out if you had taken the tenant out of that site, the building was really only worth like half of what they were selling it for. So it had a great cap rate, it had a good tenant, but the problem was the buyer, he only had so much to work with. He was doing a 1031 exchange, and he didn't want to put in any, he didn't have any extra money to put in besides his exchange money. And he was going to have to put in quite a bit more because the appraisal just wasn't, going to come in. And commercial appraisals are going to be a lot more expensive than a residential appraisal. We just, in fact, today, just before coming over here, I was doing a loan on an office building, and the office building, we did the appraisal with our appraiser, and he did the appraisal for $2,000, which is very inexpensive for a commercial appraisal. Because if it was a bank appraisal, it probably would have been about $4,500. So
if you're an appraiser out there listening, go into commercial.
Yeah, so that one we funded another one today. It was a little industrial building, and it was an owner user building, and that one we didn't even appraise it. It's at like 25% loan to value, and it's an owner user, and the owner's been there forever, and he's been a very good payer, but his loan matured, so we just simply did a regular refinance. No cash out, so he is very happy.
Gotcha. So back to that Texas one, you were saying let's just say for argument's sake, I know this might not be realistic, but wherever this town was, they were paying $1 a square foot, and basically, like you're saying, once you did your appraisal, you found out that the going rate for something like that in that town's really only like 50 cents a square foot.
Exactly.
But for whatever reason, this tenant was paying higher rates. They've been there a long time.
Yeah, they actually had been there for quite a few years, and it was a business that was good for that location. Now it was an older building, built in the 1930s. So it's a situation like for me personally, even if you could have bought it at the market rate for the value of the building, the fact that it was a smaller town, about 10,000, population, and an older building like that, it wouldn't have been something that I would have bought. But I know it was intriguing from the fact that it did have a strong tenant, a NASDAQ listed company that had been there for quite a while.
But if they left, your cash flow is going down.
Yeah, your cash flow would, definitely be going down. And then, who's going to rent it? Because it is an older building and there wasn't a lot of population around there. And so, as long as the tenant's there, great. And he still had, a number of years on his lease. But for me personally, it would have been a little worrisome, because of that and being that far away. And the buyer, he was actually out of the country, so management might have been, an issue for him.
Yeah.
If the tenant had ever left.
Yeah, and it's, that doesn't, that seems probably like of all the appraisals or just commercial like decisions. Like if I was going to rent a residential, triplex or something like that, and it was like, well, yeah, we got this guy, he's been here for 5 years and he's paying way more than he should be, but, he's a good tenant. It was like, okay, well, do you take the bet that he's going to stay or, then it sounds like you said, no, you don't want to take that bet.
Right.
So was this the buyer or the fund?
This was a buyer.
Okay. So, yeah. Okay. Right on. And then like what, you said you looked at cap rates and you look at price per square foot. So, and I'm assuming you probably look for like if something's rented way under market that you can.
Well, yeah, if you got a property obviously that's rented way under market, that's a positive, because if you do have to release it, chances are you'll be able to find a tenant and get maybe closer to the market rent. Now, for me, I'm more concerned with the tenant staying there, having a longer lease, and also having a triple net lease, because I don't want to have to get in there if it's not close by to me and replace a roof or, get into like the structure or HVAC or anything. So the one I did own previously, now I had to take care of the maintenance, and I had my list of contractors in the area, and they were very good, and the tenant would call me. I'd call the contractor right away. Hey, tenant's complaining about this. Can you go and look at it? He called me back. Hey, this is going to need this and that. This is what's going to cost. I said, go do it. Take care of it. Because the last thing I wanted is an unhappy tenant, that was going to move out and, leave me with a vacancy, which then I had to fill. So that was kind of my strategy.
Gotcha. So when you're running numbers on these properties, and maybe I'll give you an example, and you could, like if there was, like a multi, like a strip mall, and there was like 5 units. All right. And like the tenants were only paying, $500 a month, but like it should be $2,000 a month. And the owner wants $1 million. Like, where do you even start to like figure out like if that's.
Well, you first have to look at, are they month to month? Are they short leases? Are they long leases? I mean, if some guy, he got the landlord to give him a 5 or 10 year lease, and the rent's like, that far under market, that's going to be a problem, because.
Let's say for argument's sake, they're on month to month.
Yeah. Well, month to month is not as big an issue, because again, if the property's well located, good traffic counts, and that tenant leaves and you have an idea for a replacement for him, and all of a sudden you can, release it and get close to market. You put let's say five new tenants in, and all of a sudden, your cash flow jumps up by, so many percent. Now, because a lot of these commercial properties, you're looking more at cap rate, because it's not going to be an owner-user situation. People that are going to buy are looking for the cash flow. So if you can get it at a good cap rate, maybe the seller, he wants a certain cap rate, but most people would say, well, that doesn't make sense. But the leases are short, or they're month to month. You can get rid of the tenants, or say, hey, I'm going to go in, I'm going to renovate the building, but I'm going to be asking this amount of rent for the renovated space. Are you still interested? Some may say, okay, yeah, because they know the market, they've looked around, and some may say, well, no, I think I can find something cheaper. So, but the ones that stay, you do the renovation, and you're bringing up the value. Just like with a house, you might find a house and it's worn down, and people have been living there and paying low rent for many, many years, and all of a sudden you pick it up, you go through, you clean it up, but the person's month to month, and you say, are you okay, if I raise your rent? Some may say yes, and some may say, oh, no, I don't want to pay that. Yeah. But now you've got a house, that's cleaned up, it's very presentable, and people will pay, market rent, because, let's face it, there's not enough properties right now available. So, trying to get into something, whether as you're a renter or a first-time buyer, it can be a lot of competition out there.
Gotcha. No, it all makes sense. What is there, like a certain cap rate you aim to buy at, and versus like you want to be at?
Yes, I'm right now. I want to be at 7 cap on a building, and the reason being is
to buy or to get it up to 7 cap.
Well, either be able to get it up to 7 cap right away, or buy it, at a 7 cap. And, the deals are starting to come out, because as rates go up, people realize trying to get sell a property at a 4 or 5 cap may not always be realistic anymore, because the people that have to finance, or let's say a lot of the commercial loans are coming due, the balloon note is coming due, or they're reset, their fixed rate period is up, the market is going to reset, and the rates are a lot higher. So all of a sudden, instead of maybe a 3 or 4 or 5% interest rate, maybe you're looking at 6, 7, 8 or 9% rates. So all of a sudden you figure that into the equation, the cash flow isn't there. So the owner of the property, if he wants to sell, all of a sudden he's got to boost that cap rate up to make it make sense, because if the potential buyer is not a cash buyer, he's looking at, hey, my financing costs are a lot more now. My cash flow is going to be a lot less, and I need to get, a certain rate of return. And for me, if I'm looking at properties, I want to compare it to other things that I do. Like we do notes, a lot of private money notes, and so the yield on those notes is higher than the cap rates on properties. So even though you're not getting the appreciation on a note, you're still getting a certain rate of return. And if I'm getting, let's say, 7, 8, or 9% on a note, do I want to get into a property at, let's say, 4 or 5% cap rate? Probably not, because still the properties can be more liquid, and there's, can always be risk, with any piece of real estate. If a tenant moves out, or you got to go in there and do a significant rehab of the property.
So on that example, like if you're you're aiming for a 7, but you want to hold it at a 7.
Yeah, I would like to hold it at a 7.
So it's only at like a 4 or 5 or 3 or whatever. Are you trying to? Are you looking for those properties that you can get up to a 7, or you want them to be at a 7 already?
Well, actually, I would want them to be close to a 7 asking price. I mean, because, looking at the market right now, I'm seeing a lot of better deals, some properties that are sitting, the ones with lower cap rates. Now, the ones that are selling are the ones where somebody's doing an exchange. They'll take a lower cap rate because they're obviously looking at the tax benefit. But for me, if I'm coming in with, real dollars and not exchange money, then again, it's a trade-off. It's like, do I want to buy this property? And if the cap rate's too low, I just rather just keep it in notes. For me, the notes are, liquid. Our notes pay very well, and it's a good cash flowing. Everybody has their own thing that they like to do, but right now it's notes. But if I can switch some of the notes into actual real estate, that's great, as long as the return is there for me.
Gotcha. And maybe like, that all is very helpful, because I've been interested in commercial. I've had a few commercial stuff or commercial leads come across my desk over the years, and I'm like, I don't even know where to start, because I focus on residential for the most part. So that is all very helpful. And I'm sure people out there listening will find it helpful too. What you mentioned, and I've heard headwinds and stuff like that about the commercial sector being tough right now. And I saw something the other day, like I guess they've been doing like mortgage-backed securities, kind of what they did in the early 2000s for houses. They've been, I guess, doing it to commercial, the banks anyways. In your opinion, do you think we're looking at like some kind of commercial sector crash, like in that style, or?
Well, I think it's going to be a little bit rough sledding, but mostly with the bigger projects, like, we've all probably read things about some of the office buildings in major metropolitan areas where people, now are working more from home, things like that. They don't need the office space that they might have in the past. So there's a little more stress on that type of an asset. But I think for the smaller deals, just the regular owner-occupant type buildings, things like that, or just like the single-tenant net leased investments, that's a different marketplace, and those aren't going to be bundled up so much like the bigger deals where somebody's got like a bunch of office buildings and then they sell the paper on that. So the ones that we're looking at, more or less under the radar, but we do see the cap rates rising again, mainly because of financing. And even in 2008, rates were, they were low. I mean, there was a lot of fallout with real estate, but because the rates were so low, the cap rates really didn't go that high. Now with the rates going up so much, it's having a larger effect than even in 2008, where there was just more of a general fallout in all, asset classes of real estate. So I think now may be the time to invest because of this, because again, rates won't stay at these levels forever. I mean, at some point they're going to back down. Even if you go back historically, you look at the 1980s, early 80s, rates went through the roof. They went into the teens, but they didn't stay up there for a long time. I mean, they ended up, gradually dropping, and eventually they leveled off, and the leveling process took quite a while. We've been, at that level for so long, so there's really pressure on the low rates, and now people, expecting higher yields, and so that's what's happening. So historically, I look at it, and it's going to repeat every so often, and that's what's going to happen. I mean, nobody has a crystal ball, knows exactly, where the top is, but at some point, rates will peak out, and then, they'll start to bottom out. And in the meantime, there will be, in my opinion, there'll be some buying opportunities. So there's a lot of cash on the sidelines. People got a lot of money in money markets and other areas, and they're just looking for places to put that money. So one of the places will probably be commercial real estate.
Okay. And you saying all that made me think like, oh yeah, commercial is such a broad term, right? That could be gas stations, that could be strip malls, that could be office skyscrapers, that could be this, units that we're in.
It's what you're really interested in. Some people say, "Oh, stay away from office. It's a bad asset class." But I don't believe that in totality, because if you get a smaller owner user office building, like personally, we're doing quite a bit of loans in some of those, and one of the reasons is the banks are shunning some of those borrowers. So they still need loans. I mean, some of those loans are maturing. People need capital. Just like today we were working on an office building deal. Somebody signed docs, and some of these other types of properties that some banks are just shunning away from. Well, there's other lenders that are going to come up and scoop things up because they see opportunity, and if the yield is good for the lender and the risk reward is there, then somebody, believe me, will jump in. There's always somebody that will take advantage, if they feel that they can make a decent return on their investment.
Gotcha. And you focus on what you were saying is like the building around the corner. That's like, I think an RV like repair shop, where it's a massive building, but it's only one person. It's this RV repair shop that's in it, and I don't know if they own it or not, but that's what you would look for if you were.
Oh yeah, we love those kind of deals. I mean, and they could be financed through the SBA, or they can be financed with certain traditional banks that like owner user type properties, and they can also be financed through private money. So there are funds available, and a lot of people they come to me and they say, "Hey, I've been leasing this building, or I've been looking at getting a building, and I've been leasing, all my life, and I'd love to have the opportunity to own my own properties." So, we like to make it happen for them and give them a roadmap. Okay, this is what needs to be done. This is what you need. Your down payment. Need to check their credit. Look at their income and see if we can make it happen for them. And it might be a gas station, it might be a car wash, it might be a small office building, might be an auto repair shop, maybe a retail commercial building, maybe a small industrial building. So whatever it is, the people, they still want to own their own property. That's
it might be a new clubhouse.
Yeah,
because I just spent $5,000 putting in an air conditioner.
Yeah,
to somebody else's building.
Yeah,
I would rather just do that to my
You're paying somebody else's mortgage, and sometimes you figure out, well, by the time I pay the rent and everything else, maybe I can own my own building. So. And
2.5 years. That's when our lease is.
Yeah.
So let me know what we got to do.
And some people like sometimes the security, because you'll see like a building business you've frequented in the past, and you see a sign, "Oh, we lost our lease." Well, if you own your building, it wouldn't happen that way. Now, not all businesses are able to do that. If they're in a mall situation, that's going to be a little out of sight. But for other people, they might be, looking for just a smaller single tenant building, and the possibilities might be out there for them. So again, you could talk to your realtor that specializes in commercial real estate. And if somebody reaches out to me, I have a lot of good referrals of commercial realtors that I've worked with in the past that can help you find those properties. And then hopefully I can help you with the financing side of things.
Dude, that's so much great information. And I'm glad you pretty much came to where I was coming next, because we only got about 5 minutes left. So, as the club's one of their newer sponsors, you're not the newest anymore. Peak Finance, we really appreciate you coming on board and helping us out here, because like I said, our bills are large, including air conditioning bills to upgrade other people's units. So, But tell us about Peak Finance, and let's talk about lending a little bit and what you look for.
Yeah. So at Peak Finance, we are a direct lender, and we do a little bit of everything from your first-time buyers, FHA, or conventional or regular conventional loans, either purchase or refinance, standard FHA, zero down payment FHA. We also, do reverse mortgages for seniors, and we'll do, again, my specialty is with commercial and private money. So that's another niche there. We also do some construction lending. We also do some land loans. So we do a lot of outside of the box type of deals. But if you just want that regular vanilla product, we have very competitive rates and fees, and we'd love to talk to you about that. And we've been around for a long time. Our main office is in Woodland Hills, but I work out of the Upland office, and we just like the opportunity to help you if you even just want to chat and talk about what it takes to get into a property, or if you already own a property, what you should do. We also do home equity loans, home equity lines of credit. So if somebody is in need of cash and they have a really great first mortgage, 2 or 3%, and they say, well, I don't want to refi because, I don't want to lose that first mortgage, but they still need cash. Maybe they want to buy another investment property. So we'll do HELOCs in both owner-occupied and investment properties. So again, you can come and talk to me, and maybe we could set a plan of action for you.
Yeah, for sure. And it's so cool. I'm so happy to have you guys on board, because a lot of times, we'll have our traditional lenders, that have sponsored us in the past and stuff like that. And I think it's really cool that you guys can do that. You can do that for somebody. You can do the FHA, the VA, the conventional type of financing, but you also have this like totally in-house way of getting super creative also. Because I've seen you at exchangers, and you're definitely willing to wheel and deal to help people out. Is that part of Peak, or is that yourself?
That
both.
that's actually, it's part of Peak, but it's part of me, because when I came on board, I've been at Peak Finance for over 6 years now. So one of the things that I was looking for with a company is, hey, I do some unusual off-the-wall, loans, and I want to continue to do that. And some lenders are strictly, well, we only do, VA, FHA, conventional, and that's pretty much it.
Yeah. Or they'll be on the other side, just do hard money.
Yeah, or they'll do. So with our company, they're a little open-minded. So, we can delve into the commercial. We can do the some of the private money, but we can also, do all the regular type of loans plus the HELOCs things like that, and even the reverse mortgages. So basically, we'd like to be kind of a one-stop shop for people and their families, and if they need something, at least they can pick our brain, call us, and see what we have to offer. I mean, other companies are great, but they may only specialize in a certain product. So we just want to have a little more to offer people.
Yeah, that's huge. I think that's really cool because, I mean, like I said, you go to one company and they're like, I want to do this loan. And then they're like, sorry, you don't qualify. And then that's it. But you guys have all this other stuff up your sleeve that you can really help people out. So, again, thank you for being a sponsor and thank you for coming, on the show. How do people get a hold of you, Steve? If they need your help or they just want to talk to you about deals?
Yeah.
What's the best way?
Best thing is call me on my cell phone. My number is area code 562-818-3502. That's area code 562-818-3502. And if you would like to see, what type of products we offer, and maybe you're not ready to call me, check out our website. It's www.financialbrokers.net. So just go there, www.financialbrokers.net. Check out our site. It'll show the different products we have to offer. And then if you're interested, pick up the phone, give me a call. We're happy to give you a free consultation and see if we can help you out in any way.
Awesome. Yeah. And like he said, I highly encourage you to check out all of his material. And thanks again for being a sponsor, Steve, and being on the show. My name's Rich Rice from the Inland Empire Real Estate Investment Club. We do weekly events every Tuesday, Wednesday, and Thursday now. If you want to check out our website, iereic.org. Again, that's iereic.org. And thanks for tuning in.